I want you to picture for a moment exactly what your life would look like if you were a millionaire. The truth is, you would have a lot of the same concerns, consistently working hard to grow as a person and develop fruitful, loving relationships all around you. Your greatest concern in life would still be your health and the health of those around you. There would be one main difference though, and it's an important one. You would no longer have to worry about money. You would have the freedom to do what you wanted, when you wanted. You would have control. Financial freedom is the freedom to be able to make choices. The choices about what you do with your most precious resource, your time, who you spend it with, and where and what you do with it. I want you to open yourself up as we begin to talk about what it takes to become rich trading. Traders are often very concerned with how much money they can make and how quickly they can make it. And each day and each trading session is approached as almost the improbable or impossible. The reason I want to share this formula with you is because it's very important to have the correct mindset, the mindset of an investor. And it's important to focus on this formula for the bigger picture. And this is going to help you to be able to execute, which is what you need to do in order to achieve your goals. You need to be able to execute. So let's take a look. Starting with a $3,000 balance. How do you get there? How do you achieve your goals? Where are you starting from? If you're starting with just a $3,000 balance today, and you are committing to making for the next 5 years, regularly, yearly, another $3,000 deposit, what is that? Like $260 or so a month. Go ahead and take a look, and the rate of return. You know, holding Bitcoin, what do you think you could do? What do you think you could achieve yearly? I think the average rate of return annually is something closer to about 120%. Take a look at some of these numbers. 2017, 1,300, 2020, 300, that's 2019, 87, and 2018, 72. These two cancel each other out. You're looking over 4 years, 1,600 divided by 4. You're looking at 400% a year. There you go. Mean annual return, 400%, showing the percent change for every year into Bitcoin. It's a couple of down years. 2022, right? Good chance it's a down year as well. That's what I'm expecting. Not being invested, whether that's worth it to you during these bear market years, it could have a significant change in your overall accumulation. That's for some more advanced stuff. So you can see, even if we did experience something like drastically diminishing returns, instead of 400% over the last 4 years, maybe we're looking something forward at like 200%. But even if we only get 70%, what happens if you use something realistic? What happens if you use something like a 30% return over the next 5 years in Bitcoin? You're looking at taking a total deposit over 5 years, $18,000, and growing your account to $46,000. That's only over a 5-year period. But it's also with a 30% return. I think that I personally expect to achieve over a 70% return annually in Bitcoin over the next, 10 years? Absolutely. So let's take a look at that. Let's make that 10 years, 70%. I think underestimating greatly over there. We'll see. We don't know. I think it's safe. I think it's safe to work out my plan using 70% expected return in Bitcoin over the next 10 years. And then you're taking that $33,000, you're turning it into $2 million. Now, $2 million is comfortable. You could basically buy whatever you want whenever you need it. Really very comfortable. But the thing is, when I first started doing this, I did this with 11 years. It was an 11-year plan with 3 halving events. And if you really want to plan this out correctly, starting today, you could go ahead over the next 11 years, expect to have 3 more halving events. Next one, it's every 210,000 blocks. Next one, estimated 20,024, 20,028, 20,032. But the thing is the bull market happens the year after the halving. So you're going to want to make this a 12-year plan, 70% annual return. And now you're looking, total deposits over those 12 years, $39,000, $3,000 a year. You're committing to this plan, to your investment plan. And then you're looking at, $5 million if we hit our expected 70%. Anything could happen. Understand your risk and what your risk is before you make any investment, and do not invest any more than you could afford to lose. But make sure you make calculated risks. Is this a calculated risk? Now, if there was just an 85% annual return in Bitcoin over the next 12 years, you would be looking at something, $15 million. That's from here on up, you go on borderline ridiculous for a 12-year plan. But, 70%, 12 years, next 3 halvings, you're starting today, $5 million is rich. $2 million, you're definitely comfortable, no question about that. But $5 million, I would say that it's a great plan to have in place. I think it's foundational, fundamental, that anyone beginning before anything else should have this plan in place. And then you could go ahead and leverage different investments. Why does it matter? If we're experiencing diminishing returns, then we want to be following a roadmap, a guide that is giving us that clarity that we could position in and out. If you're just buying Bitcoin and holding it for the next 10 years, you don't have to do anything. You could walk away. But if you're trying over those next 2 years where you already have that fundamental plan in place to acquire as much Bitcoin as you can and doing it in a very calculated, risk-averse way, then it really matters to understand these price movements. 150 days, that's a small time frame to be looking at and considering for this type of investment. The 2012 cycle, you can see here in 2013, peaking higher. This is 11x, an 11x, 7x. Are we going to see something like a 9x, something in the average of the two? As we've seen up until this point, this cycle has been an average in volatility to the upside. It's been an average of the 2 cycles in volatility to the downside. And as far as consolidation and sideways so far up until this point, it's been an average of the 2. Will the return also be a 9x? If I can get it, I want it all. I will take what the market gives me though. Honestly, if you're not part of the training program, if you're not with us on the Discord and you have not watched all the training videos that we put together, that I put together, whether it's how to trade and profit from the markets on a swing trader's perspective, focused on the currency markets so that you could trade all markets, or specifically the Bitcoin exit series, talking about what that cycle peak looks like, talking about how Bitcoin and altcoins react with each other. That stuff done months ago. Everything that we said is playing out. Absolute fire. Mic check, mic check. What is going on? Good morning, everyone. Good morning, CTM. Great morning, CTM. Happy Thursday. Looking forward to this session. The bull of all bulls getting ready to run. Let's take a look at it because she's beautiful. She's really beautiful. Now, let's also be careful over here. The bull of all bulls is about to run. It's not yet running. Everyone here knows that the most important trend line in crypto needs to break before this thing takes off. You're looking at the bullish case for Bitcoin over here. Everyone needs to know and understand nothing has changed for the past 2.5 months. Very early, all the way back in May, this line was put here, the most important trend line in crypto, and it was said, until it breaks, momentum has not returned. The bull is not running, but the bull, she's getting ready to run, and she's about to run. Now, what that means as far as timing for everyone, look, it's not clear until it's clear, right? Don't get that wrong. Until this line breaks, the bull is not running, right? Now, we knew once we broke out of the descending wedge, right? And then we had that beautiful breakout retest resumption. We were all over it on Twitter, live action, the 2-hour, then the 8-hour. That was a good sign and a good signal. But we said as that occurred, hey, listen, that just gives the opportunity for the bears to attack. The bears' next logical, strategical standpoint to attack was going to be the most important trend line in crypto. A lot of bears were looking to attack down over here, right? The risk reward was not there. Here's here's a potentially better risk to reward. But do you understand where we are in the cycle, in the 4-year cycle? Are we in the accumulation phase? Are we in the bear market? Or are we in the bull market phase? CTM knows that we're mid-cycle. We don't look to sell Bitcoin during the bull market phase. We're waiting and picking our spot here to go long. We're going to look at that in a second, right? The bullish case for Bitcoin never been stronger. By the way, I wonder, for those that were with the channel when it first launched back in October 2019, right? And when Bitcoin would come off from that $7,000, $8,000 all the way towards 6,500 and as low as 3,800 or 4,200 rather it was, right? How many of you would have capitulated and given up? How many of you would have been trolling? You're on the wrong side of the trade. What do you know? What do you know? Well, here we are later. Here we are now, right? Trading from a position of power. Let's take a look at it. The bearish case for Bitcoin first, right? Again, this was the place to attack the most important trend line in crypto. They're still holding their momentum, right? And that momentum holds until two things happen, right? We know that coming out of repairs, this is the inverse, this is damage. That's the damage line. Stop loss is always the highest price point over there. Now, I use candles for that to get the high of the wick, not of the close when I do that myself. And, you know, is that trade still active for if you're bearish on Bitcoin? I don't think anyone here on this channel is selling Bitcoin. There could be, though. There could be those hedging. I know some of you are hedging, right? And that's good and that's smart. And then also we know CTM that it's actually a lot sooner, or it's going to be sooner than that actual break of that high. It's going to be when the most important trend line in crypto is broken, right? I myself yesterday putting on a trade. Now, this trade was discussed and it was very, the communication was as clear as can be. When I talked about the entry being for everyone, for most, that when price breaks the most important trend line in crypto. And then I talked about two stop losses perhaps at that point, right? So you have not had that trigger yet. And that could be the last swing low. So that's going to be lowered a little bit, right? Or it could be down over here at the lowest price point of mid-cycle. Whatever it is, we talked about managing your risk. And we went over that. So beautiful. You know, such high level advanced information, you know, being shared with everyone and doing it in such a really inviting, welcoming way. But still, so many people still missed it and get it wrong. Still so many people out there, you know, big shout out to Lemmy, because some people just can't get it right. And it's unfortunate, but I want to take everyone with me, that everyone that's possible. I want them to come with me. So I go through great lengths to polish everything, right? Now, my skills, my expertise, my trading, right? I've spent decades sharpening that, but my communication skills, I'm still trying to make sure. I know that many are called and few are chosen, but I want to bring everyone with me. I try really hard and I go to great lengths to do it. Listen, let's take a look. Let's start here before we get it. We have a lot to talk about in this session. Do I still have up on the, hold on one second. Oh, good. I was wondering if I still had up the syllabus, right? I was wondering, but I don't. So we're going to come back to that in a little bit. Let's take a look and start yesterday, right? It's very clear. Look, it's really important to review things so that everyone gets it right. So many people continue to get it wrong that I want to make sure that everyone has the clarity. I'll be able to do this like reviewing a play during the Super Bowl and be able to pause it and talk with you. But we're laying out the trade here. I'm very clear the trigger of this trade is when price breaks the most important trend line in crypto. And then we talked about whether or not you want to take that breakout or the breakout retest resumption and go over the different possibilities. Shots without a plan, but spending your time lining things up so when the opportunity presents itself, you are there to attack, right? Now, using your stop loss once price breaks the most important trend line in crypto. Once price breaks the most important trend line in crypto. Once price breaks the most important trend line in crypto. Miles, I know, but this is there are other people out there. This is really going to help, and there's still the opportunity. Some are lost. Some are lost, and they have no chance. If you are here in CTM and you are investing your time daily, and you're giving the opportunity to be working with myself and this community and this team, and after X amount of time, like you're still so lost, there's really no hope for you. And I'm sorry, you know, but there are many out there who are just joining us. They've just started and you know what? Things need to be made abundantly clear to giving them the opportunity to do some life-changing stuff, right? Andre Noble, he's one of them. This guy's never going to make it. And it's so sad. He's like in an emotion. I don't even want to bring up Andre. I'm so sorry for your brother. You know, you've had a tough life and you haven't been able to get over the hurdles thrown at you, but you're an emotional wreck, you know, and that's just the way it is. So Listen, let's bring it out. Let's keep going. Oh, there we go. I could just refresh that. We were talking about the trigger is when price breaks the most important trend line in crypto. The internet is a funny thing. There's people, and that's who your neighbors are. But we are called to love our neighbors. What is love? Right? Is love just how did Jesus handle love? How did Jesus address the Pharisees? Something to keep in mind here today. All right, let's keep going. Let's look at, I'm stopped out of my trade that I took yesterday. I took an entry, an aggressive entry. It was labeled and discussed as aggressive when I took it. And then the next thing I did when I'm talking about that aggressive entry, and that I am willing at this point in time to take 5% of one particular investment that's up 4.5x, right? I'm willing to take to risk $10,000 here with not a 10 to 1, but a potential 50 to 1x, right? And not only that, I said if I am stopped out, it's a really aggressive entry. That you're going to hear my words, that the next thing I'm going to do is I'm going to do exactly that. I'm going to move this trend line over here to the next line of repair because that's what it's going to be. And then will I take the next entry? Yep. Will I risk 5% again? Yes, I will. Right? It's very clear about my strategy. Now, me getting stopped loss, that's part of the game. That's neither here nor there. That's just about trading, right? You could be wrong, half the time and still be incredibly profitable. That's not a big deal. But let's look at it. Let's see what's said over here and pay attention. It's good. Watching what's going on, keeping that awareness I have. Triggered this morning, right before, about a half hour before I got online with you all, right? The risk, I know my risk, right? I'm willing to risk 5% of one of my accounts. That's no problem. Of one of the many strategies that I'm deploying throughout this bull market and before it even started, as I presented to you from day one, taking as many people as possible with me, right? 5% at this particular time mid-cycle, it's preemptive. There's no question about that. We haven't broke the most important trend line in crypto. By the way, if I am stopped out, right, and then I'm going to go ahead, what is Jordan going to do? Jordan's going to take the next line of repair. He's going to put it in. Will he take that next one? Most likely, right? Will I risk another 5? You guys see that? Do you, if you're one of the people who watched yesterday's stream and you didn't listen to what was said, and instead you had your own experiences cloud what was presented and what the value, I mean, this is beyond masterclass. It doesn't get any better than this, any higher level than this. And if you're out there and if you're privy to this information and you're getting it so wrong, I think that you really need to sit down and have a talk with yourself and find out what's going on. There's still hope for you. I believe that there's still hope for you, but you really got to get serious with yourself, and that's it. And that was my plan. If stopped out, like the next thing I'm going to do is I'm going to go ahead and I'm going to enter in this new line of repair and I'm going to wait. And then I said, well, if it breaks, will I take this trade risking it? Most likely. And that's what it is. When I say most likely right now, if you were to ask me what the percent chances are that I'm going to take that trade, I would say it's like 95% or higher. No question about that. Will I be risking 5% of my account again? Yes. If I got burnt again, then I'm probably waiting for the most important trend line in crypto to break, and I'll be risking wherever my stop loss is, and it won't be down over here. I'll be using the more aggressive last swing low, and it'll be another 5%. Is that potentially getting stopped out of 15% of that trade on the way up, trying to catch a risk reward that I'm trying to catch? Yeah, that's how I'm doing it. Now, if you're looking for the conservative approach, as laid out as clear as day, well, then you want to be using once the most important trend line in crypto breaks, right? And then you have the retest, then resumption, and understand that price might get away from you, right? Price might break out and shoot up. Your entry might be a lot higher and your stop loss is going to be down over here. And you're risking that same, what? We talked about 15%. Is that what you would be looking, right? So there you go. Listen, I know it. Andy, I know that. And it makes me happy though, when you say that you get it and that you saw it and that you chose to wait for complete clarity and understood that was an aggressive trade, right? I grew up trading the 3-minute E-mini futures, right? On the S&Ps. You know, talk about aggressive, forget about it, So listen, I think this is well calculated, been spending a lot of energy and time, 5 days a week, at least an hour, 5 hours a week, lining this all up with you. There's reasons why I feel comfortable taking 5% of an open investment to risk it, to add to a particular position, as I believe we're getting ready here to break out of this mid-cycle and begin the second half of the bull market run. And the bull is about to run. The bull. Now, I don't know whether or not that's going to be this week or if it's going to be through into September or when it will be. And the possibility remains and is open, and it could happen that this is not the mid-cycle low. The possibility is open and remains before the most important trend line in crypto is broken, that price comes down and takes out that low. If that does happen, if you see price come down we will be lining this up over here from whatever that low is to go forward to the future, right? That's been the plan from the beginning. As we worked out our CTM meta model. That has not changed, right? Is it possible that price breaks the most important trend line in crypto to the upside and then comes back out and takes out that low? That's not the plan. Anything's possible. It's the markets. I believe once the most important trend line in crypto is broken to the upside, there's a strong probability that the golden ratio, the 1.61 fib, that the mid-cycle low has held in Bitcoin this cycle. We'll see. I just want to make sure everyone was clear. That Lachi, got that entry with you. It was clean and textbook. Yes, it was. It was so, and that's why I feel so good about it, right? I accept responsibility on following that with you. Was a good trade. Now we draw a repair line and wait for another break. This means the world to me. This means the world to me because I read this comment, I highlighted it as soon as I saw it, but I'm reading it now, and you just did the same thing that I did with everyone. In yesterday's video, I said, if stopped out, what I'm going to do is draw the next line of repair and look for that entry and most likely take it. Lachi's like, listen, Jordan, I took that trade with you. I knew it was aggressive. There's a good trade. And not only that, Jordan, I got stopped out and what I did was draw the next line of repair and I'm waiting for it. Lachi conquering that comment right there made my day. That means that the silent majority is so strong. And that's CTM all day long. It was put out in the very beginning, the first comment of today's video, right? Here we go from Craig. The most unique gathering of like minds sharpening in progress, and that students of the markets, students of life, and that's how we do it. So what's going on here, by the way? What caused this volatility? Because right now the bull is bucking. You saw a 4 or 5% move to the upside and then completely retraced to the downside. The bull is bucking. She's warming up. She's in that stall right before the bull gets ready to go out and run, right? And she's bucking. She wants to get out. She could feel it. Could you feel the volatility picking up? I can. What happened was this just normal price fluctuation? Is this just the bull, the volatility warming up? Or was this perhaps the market sniffing out and not liking the infrastructure bill, not believing that perhaps the crypto amendment is going to pass and this is not going to be the most bullish case for Bitcoin? Or did you hear about the U.S. miners? You guys are gonna really not be happy if I get this one wrong. Is it Monero? Something like that. They just upped their game and made a large purchase of a lot of hardware, talking about X amount of hash rate of quote unquote clean energy entering the network to secure the network. That signal, right? Are they worried about the infrastructure bill being passed and what that means to miners in the US, whether or not they're going to be responsible for KYC, or are they believing, right, you know what, we're making a big purchase. That, you know, noise from Signal. All right, jump back. Oh, by the way, 244 likes. Thank you for helping support the channel and helping the channel with the Google algorithm. I do appreciate that very much. If you haven't yet smashed the like button and you're watching this live right now or on the replay, go ahead and obliterate that thing. Please destroy it. Please destroy it. There you go. Mara. Is it Mara? Mara. What's up? How's it going? Over 1 year here, almost each and every day, right? Over 1 year, more than that, since March 2020. That's beautiful. Glad to share this time with you. There you go. This is a good one, right? So the bulls are always male. I refer to Bitcoin as a she, right? And you got, look, it's not going to change. I get to do what I want to do. No, I don't have to follow your rules. I get to do what I want to do and how I like to do it. Yeah, and it may be true that when you're talking about a bull, you're talking about a male, right? And I may refer to Bitcoin as a she, you know, but you know, I wonder in the Spanish language, is Bitcoin masculine or feminine? How about that? Well, how are you gonna reconcile that if here, you know, it's a male? Oh, that's a tough one. I have to find out. I have to ask some people around here what's going on with Bitcoin. Wow, a couple of people. People are focused here on Signal. Love it. I like that, Miles, too. Rightfully so. Rightfully so. All right, what are we talking about? Let's bring it back over here. We got, you know, the potential, the review in place. Everyone gets it. If you don't have it and you don't understand, or you felt that I was too bullish in going to great lengths in breaking down and explaining to the trade to you, and that the trigger for the trade is the break of the most important trend line in crypto, right? And then talking about stop losses and where it would be, and then talking about and labeling an aggressive trade, go back and watch the video. It is, you can't, that information is free. You can't get that at university. They don't teach that over at Princeton, at Harvard. That's why the smart ones drop out of Harvard. But anyway, we'll talk about that later. Let's keep going. This is Signal right here. Looking at the ECB balance sheet continuing to rise. It's not only the ECB, right? It's the combined balance sheets of the Federal Reserve, the Bank of Japan, ECB, and they're at record highs. So are housing prices worldwide. Worldwide, housing prices continue to be at all-time highs. And that is because of why that you know, priced in the central bank expansion of their balance sheets is really level. It's really people have been looking at the wrong denominator for a long time. CTM all the way back in March 2020, boom, the first one out on point talking about what was the signal and what to follow. Everyone else is catching up, and that's good because it adds to the conversation. I had been a little hard on those who got it wrong during that period of time, right? You know, and that was because of how they presented themselves. But either which way, a lot of them now working it out and understanding what's happening, and that's fantastic because that adds to the conversation. A lot of these people are able to articulate very complex ideas, and especially having to figure it out themselves, regardless of how long it took, 12, 18 months. The fact is, when they're getting there, they could help a lot more people then understand and get there as well, right? And that's what we continue to track. This over here, when I saw this chart, Ian shared this with me yesterday, and I'm looking at it, I'm like, well, that's the Fed's balance sheet. Sure enough, it is the Fed's balance sheet. This was when it all started back in 2008. This is December 2000. Was it October or December? October is the first QE, I believe. December, I'm not sure. I forget. You know, but later months of 2008, you know, all of a sudden QE begins, the expansion of the Fed's balance sheet. They tried to stop it. They tried to tighten over here in 2018. That broke the system, right? Now, the pin was actually the global lockdowns that caused them to go ahead and have to make this next expansion. When does it happen again? Is that the question? Are we going to see this continued climb up? Is it going to plateau out? And then is it going to expand upwards? It's important when we talk about, and listen, I need your help on this one. I need your help on this one, and then we'll come back and we'll look at price a little bit more closely. Price right now so far just taking out stops, including mine, and just bouncing up a tiny bit. But, there's no action here on the long side, and then the aggressive action is going to be a break of this next repair line. And it continues to be aggressive, right? Those that are looking to play it safe and smart know very clearly they're waiting for the most important trend line in crypto to break. And if you're bearish on Bitcoin, what are you targeting, right? I mean, the first area of support is around that $32,000 area. That's where you would first be potentially taking a little bit of profit and moving your stop loss to break even, hoping for a potential breakdown. That doesn't seem like a high probability trade, right? By the way, yesterday when I talked about this trade with a $700 stop, I told you that it was a very, very, very low probability. Watch the video again. That there's a very, very, very low probability of that occurring, right? You don't put on a 50-to-1 risk reward and expect that, you're going to get it right the first time, right? But anyway, let's keep going. I need your help on this because when we're looking at, in the beginning of this video, I talk about what I believe is going to be the return of Bitcoin over the next 12 years. And I put it at 70%. And I say that I believe that's a little conservative. I think that it's actually going to outperform that. All right. Listen, if anyone has different opinions, I would really like to know. Now, I say do the math, right? No. Brent, that's way too long. So Brent's talking about wait until price makes the new all-time high. And listen, look, to each his own, and that could be your thought. But I've tried to help you understand whether you were looking at what happened in the 2012 cycle. It's not when price makes the new all-time high. It's when price breaks the most important trend line in crypto. And then I tried to show you on the 2016, right? It's when price breaks the most important trend line in crypto. It's not as price makes that new all-time high. You're leaving a lot on the table if you're waiting for price to take out $65,000. The correct entry, in my opinion, hey, do your own research, form your own opinions, is when price breaks the most important trend line in crypto. All right. Got a lot. I love you all. The agendas. All right. Let me bring that up. Sorry about that. Boom. What I was trying to show you is this, and I could show you again really quick because it's kind of important and I missed it, right? All right. Here we go. So look, this is the 2012 cycle. Here's the most important trend line in crypto back then. The breakout is the correct entry. If you're waiting for price to make that new all-time high, in my opinion, you're doing it wrong. You're leaving way too much on the table. Now, that's not just 2012. Look at 2016. It's this one in dark blue over here. Here's the most important trend line in crypto. Happens to be breaking out in July, right? Now, if you wait for the price to make the new all-time high, I think that you're leaving a lot on the table. And I think that's what's going to play out exactly this case again. Once price makes the most breaks the most important trend line in crypto, that's the entry, not when price makes the new all-time high. I think you're leaving a lot on the table if that's what you're waiting for. That's my own opinion. Do your own research and make your own decisions. That's where we're at. So thank you guys for letting me know about that. Listen, where are we? Let's bring it forward. I need to understand your thoughts on what you think will be potentially the compounded annual growth rate for Bitcoin over the next 12 years. Because the next 12 years includes 3 halvings, and it also includes the following bull market. So if you're just starting today, you get it all. There's no question about that. Now, I started a couple of years ago with this particular plan, right? So I'm way ahead. I'm ahead by a halving. Will I play it out? Well, listen, I'm gonna be involved in the markets forever, right? No question about that. But listen, Year of the Bull did a poll on Twitter asking people what they thought it was going to be over the next 10 years. And, 43% thought it was between 100 and 200%. What it is, we don't know. Listen, here we go. I'm trying to find it over here. It was a great question came up, and I want to make sure that I have it to share it with you because I need your help on it. All right. It was brought up over here. He's like, Jordan, you keep saying that you expect a 70% return. I put it on the front of the video. I want to make sure that my belief is right. Again, I believe this is actually going to be underperforming over the next 12 years. Have you run the numbers, right? That puts Bitcoin at a price of around 22 million per Bitcoin. Do you really expect that? Come on, right? So there's different ways to look at it, and we want to make sure that we get it correct. This is important stuff over here, and I'm trying to find, right? Well, Ethan over here, really good comment. And he's like, look, the problem, this is off of Year of the Bulls. The problem is that you're pricing it in dollars. In purchasing power, probably 100% sliding down towards the end. But in dollars, it's all up to the money printer. Let's unpack that really quick for a second. And also, as he says, towards the bottom end, that should be sliding down. I do believe in diminishing returns. I just believe that right now we are too early on the adoption cycle to be experiencing them. Let me see if I can pull this up for you a second, and I can pull up the adoption cycle. And here you go. Page load or not load. It's not loading. I believe that we're really early on the adoption cycle. And I believe, it could be like another 6, 7, 8 years before we reach the top of that bell. So I believe that we could see not diminishing returns. I think that we're seeing actually this particular cycle, on par and increased returns from last cycle. But in the future, we're going to see diminishing returns. I really do believe that. So I was very clear that it's the front end, the next 4 to 6 years, next 4 years, 4.5 years is going to be when it's really front loaded. And then those returns to start diminishing at the end. Now, that being said, there's more to it, right? You could also, I'm looking to average 200% personally, right? Leverage is beautiful, right? And you could see an example of leverage being put on in yesterday's episode and how that could really make a difference, as it has already on that trade, up 4.5x in the past 12 months, right? So, what is, listen to this. This is where it gets interesting. What is 400 trillion divided by 20 million? Right? So it winds up being actually about 18 million. Do you think 12 years from now that we're looking at the amount of monetary supply in the world as being 400 trillion? That's the question right there. We looked at this. We understand the direction things are heading. We looked at these. Do you think that the Fed's balance sheet alone 12 years from now is going to be $8 trillion? Or do you think it's going to be 20 trillion or what more? So you have to be careful. Just as housing prices continue to go up in value, not because they're getting more valuable, because the purchasing power of the dollar continues to dwindle as the central banks continue to print money. Do you not think that same thing is going to be happening with Bitcoin? Are you looking out into the future? And you remember, Preston talks about how difficult it is for us to be able to comprehend what exponential growth is. He talks about folding a piece of paper X amount of times, and it would be from here to the sun, right? We can't, our minds can't really wrap our head around it and comprehend it. Forget Bitcoin under the current system and its current trajectory of what you think price will be priced 12 years from now. You have to add in the most important factor, and that's the continued devaluation of fiat, specifically the dollar, its purchasing power, and what the expansion of the Federal Reserves and central banks' balance sheets will be. So I feel really strong and good about that. By the way, when you're looking at, over the last, 10 years, 120%, compounding annual return growth rate on Bitcoin, right? Has that diminished in this particular period, right? When you're looking at this and you could say, well, the first halving to the second halving, that was diminishing returns by a lot. Has this been diminishing returns from this point to here? Actually, it's been increasing. It's been increasing. So listen, I stand by not only that I believe that it's going to be 70%, if you don't think that over the next 12 years we're going to be see a 70% annual growth rate on Bitcoin, do the numbers and run the numbers yourself with 30%, right? Figure out a game plan using something like 30%. It's mentioned that you could do like starting with $3,000 and then you're looking to make $3,000 deposits over the next 12 years, you know, with a 30% return. Boom. Right? And this could be your plan. And it's better than any plan that you have in place. Now, I don't think that it's going to be a 30% return, right? And I think 70% is safe. However, at the same time, I'm looking for 200%. And I think that, you know, I think that with a few calculated moves per year, that most of you could do that, even if it means only participating in the bull markets. Even if it means for most of you that you're only going to participate, right, in finding out where that cycle low is. You know, by the way, we'll be able to call it, as I did the last one, when we had that cycle low over here in December 2018, calling the capitulation low. Maybe you should only be, you know, trading a certain portion of it and sitting out the rest. And if you're just starting today, waiting for the most important trend line in crypto to break over the next 5 months, I don't think that you're looking at a 70%. I don't think that you're looking at a 200%. I think you're potentially looking at something like what could be a 9x. Now, if we just mirror the last bull market, you're looking at a 7x from the time the most important trend line in crypto broke to the cycle peak. You know, coming into the most important trend line, this cycle happens to be outperforming the last cycle, right? We are seeing uber easy monetary conditions. I expect that to continue as public companies, as family offices, as sovereign nations are adopting Bitcoin. The FOMO is going to be real. Does the potential exist or that this is the last cycle? Anything's possible. You know, you might want to buy some in case it catches on. What I'm getting at, it's still early. Do I think that you could put up still a 200% return this year over the next 5 months, assuming that we break out over here the most important trend line in crypto? Yeah. What would you be targeting? Are you targeting, is that 80,000 or 120,000? You know, listen, I think it's genuine to say that I believe over the next 12 years that the average return is going to be 70%. It could be much higher. I mean, Michael Saylor talks about all your models are broken when you see a huge inflow of money, you know, a tsunami of money coming in to that black hole Bitcoin. If something breaks over these next few years, over this next decade, remember Janet Yellen told us there was never going to be another crisis in our lifetime? These are the people who are in charge of the financial system. If something breaks and they lose control, the possibility remains that we could see hyper Bitcoinization, right? I don't think that we're going to see hyperinflation inside the US, but the possibility, you know, it's out there. So anyway, I'm going to go back later and read your comments to see what you all thought about what you think is a genuine expectation for the compounded annual growth over the next 12 years. I don't want to have that in the beginning as a template, as a plan for everyone if it's not correct, right? I strongly feel that anyone involved in CTM and anyone putting in the time should not only be able to achieve with some calculated trades that 70% a year in Bitcoin, but much higher over those course of the next 12 years. We'll see how it plays out. What else? Is there anything else that we wanted to talk about? I'm going to be doing the live stream in just a little bit with you all in 45 minutes. I'll post a link in Discord. If you're not part of the Discord, there's a link to the training program in the description below. We'll go over at that point, not only all of FX, we'll look at gold, silver, the dollar, and also the indexes. So we'll leave it for then. Before I get off, let me go ahead and play some Honeymoon and see what you're all up to, and then we'll take it from there. This is something we're going to build off of this. That's a good one. Matt, there should be nothing to reach out about joining, right? The link's in the description below. Peter, let's talk about it. And I'm gonna just pause that music so we can talk about it really quick. Jordan, my base case, Jordan, your base case assumes that the printer keeps printing 100%. There's no question about that, Peter, right? Because there's a beautiful interview that Ted shared with me last week on Real Vision, and it's Jeff Booth talking with Raoul Pal. You have to watch it. It was so good. Yes, they're catching up to where we were a year ago. Jeff Booth has already been there, of course. The base case is that the printer keeps running. There's no other option, right? If you understand the current monetary system, you understand that that's the only option. Otherwise, the system completely implodes. It would be death and destruction, something like the world has never seen before, if the financial system collapsed, right? I have over here, and Peter, it's great you brought this up. The title of the video for today was going to be, but it'll be tomorrow or the next day or next week, the greatest risk to Bitcoin is the implosion of the financial system, right? And it is the greatest risk. We're always looking for the risk. You all know that I'm always focused on what Powell and the Federal Reserve and the central banks are doing, right? You have to understand that they have no choice but to keep printing. They already tried to pull back quantitative tightening in 2018. It didn't work. They broke the system, right? I briefly alluded to that over here when I showed you this chart. And when they tried to tighten, they thought that they could tighten. We had the problems in the repo market starting in September 2019, and that went through December 2019. And then just a couple of months later, the whole system broke and imploded. And then this happened. This is all the repo. This is the repo, and this was the expansion. Right? So what probabilities do you put on the private central banking system, the Federal Reserve ultimately being replaced before them, the good guy reset? So what's interesting also is that, and this is where that it's awesome having minds like Raul and Jeff talk together and to be able to articulate really, really complex thoughts. They talk about really the only hope for the current system is Bitcoin. And it can't be like a quick jump to Bitcoin, right? The more gradual it is, the longer it takes, the better for everyone, right? So, could they have some type of reset? It's long been my standing thesis that what they're trying to do right now is buy time until they release the central bank digital currencies, right? Actually, we're going to pause 1 second and I'm going to show you something that you're really going to enjoy. And listen, and then we'll take up this conversation in 1 second.
The IMF issued $650 billion worth of SDRs. Like, who voted on that? Who asked for that? What is this for? That tripled the amount of assets on their book, but they sent this to all their countries who are members of the IMF. And so 650 billion created out of thin air. Like, what's that about? Like, who got this airdrop? Why did some people get this airdrop? That's proof of stake for you, by the way. That's how proof of stake works.
Yeah.
So the US would get the most because we have the greatest stake in the IMF. And then European countries and Japan and China, they get another big stake. The countries of Latin America and Africa, they get tiny, tiny, puny little chunks of this, like the nuggets of this new huge pile of coinery that was created.
Right. Well, this goes back to a story we've been covering more than 10 years. More than 10 years. Going back to Kaiser Report when we had Jim Rickards on quite frequently, who laid out
Sure.
the story in exactly how it's unfolding right now. So during the past 10 years, when every time Wall Street hit a crisis by selling too much debt, would, if mark to market, cause all major banks to become insolvent and fold, they did a swap with their bad debt with the Fed for T-bills, right? That's essentially quantitative easing. So they did a swap, and they gave them fresh, clean treasury bills to get rid of their junk. The Fed, because it's not accountable to anybody, it's not a publicly listed company, there's nobody actually auditing the Fed, they can claim that the stuff that they swapped with the Wall Street for fresh T-bills, they can claim it's worth 100 cents on the dollar. But we know that there's actually no aftermarket for that stuff. Nobody, you couldn't, the Fed's, everything on the Fed's balance sheet, if you try to sell it in the open market, you'd be getting less than 2 cents on the dollar. So now the Fed, after years of this, they have a balance sheet of, well, last I checked, it was $7, $8, $9 trillion, and it's collateralized by nothing. And so, and this is true for central banks around the world. So therefore, we're going to see a similar operation with the IMF. The IMF is now went from 200 billion in special drawing rights, which is a made-up fiat currency, uncollateralized, nonsensical piece of shit, to 600 billion. So they're on their way to $1 trillion, exactly as Jim Rickards has said this was going to happen. They've said already, we know in the notes from meetings, that their goal is to get to $100 trillion credit facility.
That was at the World Economic Forum in 2011.
In 2011.
So World Economic Forum are also the ones behind the Great Reset, right?
Right.
So they said, and we covered it on Kaiser in 2011, they said that what the world needs is $100 trillion of new credit. So it looks like they're getting it by hook or by crook.
Right. So they're
defrauding
going to do similar operations. So all these central banks with stuff on their balance sheet that's not worth 100 cents on the dollar, but 2 cents on the dollar, they're going to swap it for SDRs. So the Federal Reserve Bank of America, Bank of Tokyo, Bank of Japan, Bank of England, right? And the European Central Bank, right? They will swap everything on their balance sheets for SDRs. And that will be the primary currency that runs the SDR. And the SDR will be the IMF. And all the governance will be run out of the IMF, which is a big problem. Because if you're in America, there's two problems. Number one, your agency as a democratic citizen of a democratic nation has just been diluted. It's like a giant cram down. If you know what that is in the stock market, one company can take over another company by issuing a load of stock in a preferred issue, let's say, and taking control of the voting rights, and all the existing shareholders get diluted down to zero. It's called a cram down.
Well, as you know, we had some new investors that have come in.
What is this?
Sav. Mark! Mark!
He's wired in.
Sorry?
He's wired in.
Is he?
Yes.
How about now? You still wired in?
Full security.
You issued 24 million new shares of stock.
You were told that if new investors
How
came
much
along...
were your shares diluted? How much were his?
What was Mr. Zuckerberg's ownership share diluted down to?
It wasn't.
What was Mr. Moskowitz's ownership share diluted down to?
It wasn't.
What was Sean Parker's ownership share diluted down to?
It wasn't.
What was Peter Thiel's ownership share diluted down to?
It wasn't.
And what was your ownership share diluted down to?
0.03%.
Called a cram down. So the SDR is being used as the cram down, effectively to take over every central bank in the world. So if you're an American, that means that the relationship you have with your social contract that you have with the entity that's governing you is now actually, they've ceded control to a global institution, the IMF. So now you have a whole quantum less agency than you did before this happening. And of course, no one's voting on it and no one's talking about it.
And that's beautiful. Listen, don't let the orange hair and the crown fool you, or the sunglasses, Max, Gary. You have to be able to learn to think for yourself. They're mocking everyone by doing that. They're mocking Janet Yellen. They're mocking Jerome Powell, and they're mocking all of the central banksters by doing that. The knowledge that was just shared to you about how the financial system works in that 5-minute clip is by far a greater understanding than up until this point in your life you've ever had. Do not let, if you are fooled by appearance, well then the greatest charade by these central bankers will continue to be played before you, right? So yeah, he's the craziest, but listen, the guy is on point and understands money, understands the financial system, and that's what's happening. They're continuing this debt Ponzi in these crazy ways, and that includes now, but who decided that the IMF was going to get those billions of dollars to issue more debt with? Do you know who it was? It was the former Fed insider, Janet Yellen, who thought it was a good idea for the US government to give the IMF, an international body, more money and more control so they could issue more debt. Are they trying what's that diabolical dude name? Klaus? Is that Klaus's plan to get the IMF to $100 trillion of new debt? Where do you think Bitcoin's going? Do you not understand the bullish case for Bitcoin? Do you think that Bitcoin, it's playing with a $400 trillion complete global monetary supply 12 years from now? That's what it is today. What's the number after a trillion? We're going to be there soon. I remember growing up when billion was a big number, trillion was inconceivable, right? So we're going to be looking at what comes after a trillion. It's going to be in our lifetimes, and it probably will be within 12 years. Klaus the Nazi, thank you. Thank you. All right. We didn't look at Ethereum Bitcoin. I want to see what it's doing after yesterday's bout, and it's continuing that breakout. Look at that beauty over there. When I say look at that beauty, right? Conquering the markets all day long, breakout, retest, resumption off. And it's clean, and it's a game changer. Something is happening right now. A lot of people thought, by the way, that once the London upgrade was implemented on Ethereum, that there would be like a sell the news type of event, right? Listen, it's hard for me to keep track of all of the timeline on Ethereum and what's happening, but that was like the big one to proof of stake. That's supposed to come potentially early 2022. That's the sell the news one. That's what everyone is front running, right? This was just like a small little software update that went through. It's like your iOS or your Android updating to the most recent system. This wasn't a big one. All right. So there he is. That's right. Joseph, some people, it's too much for some people. They're not ready yet. It's the orange pill. Can you imagine if you're not yet red pill, there's no way you could take the orange pill. You got to start with the red pill. You have to start with the money masters. You have to watch and understand what happened in 1913 as the world's most powerful people got together in Georgia, Jekyll Island, and constructed what is known as the Federal Reserve Act, which was then passed on December 24th, Christmas Eve, with just 3 senators present. Everyone was with their families. These guys are diabolical, enslaving the American people. If you don't understand money is debt, the fractional reserve banking system, then when you see someone like Max and or Stacy, you might think they're crazy. I get it. I'm with you, but I'm just trying to open up eyes. I'm trying to get people to see it. All right, I'm going to prepare here. Get prepared for the training session. We go live in a half hour. I'll send you all out the link. And, thanks, everyone. I'm going to go out some honeymoon, though. Continue that jam. Wow. Look at that shakeout. MT99. Thank you, brother. Of course, we could get some head snack up in here.
Analyzing the charts, hitting projected targets within the margin. Find the flow, sip the matcha, and wait for the waves to come in with lobsters. The kind-hearted Jordan Fosters, working smarter, not harder to move the markers. On his way to conquer, trading and investing, drinking the coffee while reflecting on the blessing. The markets are not crashing. The prices might be slashing just to pretend they're in fashion. Hit the like button, comments, and smash it. Boom, boom, Jordan in the room. Grab the bull by the horns and to the moon. Throw from the plateau, make the play. Boom, boom, it's a taco day.
Trish, what is this question? Where is the trend line now? Which trend line are you looking for? And on Bitcoin, right? Hold on. Let's bring it in, bring it in, bring it in. This is the look at, I'm looking at the 2 hour, Trish, so that you could get the precision you need. This is the new line of repair that I'm waiting for and watching. This is the most important trend line in crypto. These are the only two trend lines in crypto that matter, in my opinion. So if you were looking at, what else were you potentially looking at, Trish? I mean, this was the breakout retest resumption that took place on Ethereum, Bitcoin, right? And then here was just look at Ethereum, right? Ethereum obviously continues to be stronger. This is the most important trend line in Ethereum, and a breakout over here, a resumption off over here. That sends Ethereum breaking out for that second half of the bull market quicker than Bitcoin. Will that change? Could anything change? Did you all see yesterday too the importance of the let's say there's a great risk out there that Ethereum in the future could be deemed a security. It's a risk. There's no question about that. You all saw the SEC chairman's thoughts on that. Look, I don't know what's going to happen. I don't know as they change to proof of stake, if that changes any of the thoughts out there. Be careful out there. That's all. All right, everyone. Let me get off so I can start preparing. I'll see you all in just a little bit.